Welcome back, everyone. Today, we are diving into some genuinely fascinating data from Zen Technologies, specifically their Q1 FY7 results. Now, if you just casually glance at the headline numbers, you're probably going to miss the forest for the trees. So today, our main focus is the overview story. And let me tell you, this overview story, it's an incredible momentum narrative, defined by an absolutely massive 1,239 crore figure. We're going to break down exactly where this momentum is actually coming from, the physical tech that's driving it, and what it all means for the next 12 months. So, let's get into it.
Here's our roadmap for today's explainer. We'll kick things off with a quick Q1 financial snapshot, uncover that massive order book, check out their next-gen defense innovations, and finally, wrap things up with their strategic outlook. All right, Section 1, the Q1 FY27 financial snapshot, or as I like to call it, the visible tip of the iceberg.
So, looking at Q1 FY27, Zen Technologies reported sales of about 141.6 crore rupees, an EBITDA hovering near 57.9 crore rupees, and a profit after tax, or PAT, of 34.46 crore rupees. Now, if we track these against the previous quarter, Q4 FY26, the PAT actually ticked up a bit from 31.5 crore rupees. Not bad, right? But when we compare it year over year against Q1 FY26, well, there's a pretty visible dip across the board. Sales dropped from roughly 158 crore rupees, and both EBITDA and PAT saw similar year-over-year contractions.
Now, what's really interesting about this is how incredibly easy it is to misinterpret a year-over-year sales dip like this. I mean, looking at it in isolation, seeing sales drop from 158 down to 141 crores, that might cause a brief moment of panic. And, we all know how much the market loves to panic over a single chart. But here's the thing. In the defense and manufacturing sectors, quarterly revenue doesn't just flow in a perfectly smooth upward straight line. It is heavily dependent on specific project milestones and delivery schedules. So we really need to contextualize this drop, rather than freaking out over it. And here is that absolutely vital context. According to Zen's own management, Q1 was simply the early stage of their current order book's execution cycle. You see, the typical execution cycle for these kinds of massive defense orders is around 12 months. Because the majority of their current order book was secured starting way back in October 2025, the bulk of the actual revenue realization is locked, loaded, and heavily weighted towards the upcoming Q2 and Q3 quarters. So, the key takeaway for us? That Q1 dip isn't a red flag, it's literally just a timing effect within a much larger, very healthy business cycle. Which brings us right to Section 2, the massive order book. This is where we see the true scale of Zen's backlog.
1,239 crores and 2 cents. Crores. I just want to let that anchor number sink in for a second. That figure right there, that is Zen Technologies' consolidated order book as of June 30, 2026. This is not some speculative pipeline. It's not just soft interest. These are secured, locked-in orders. When we talk about this overarching momentum story, this is the engine driving the whole thing. It represents a massive, highly visible runway for growth over the next year.
Now, if we break that backlog down, a very clear picture starts to emerge. Out of that massive 1,239 crore total, a staggering 1,153 crore rupees comes directly from the domestic market, compared to just about 85 crore from exports. So what does this tell us? It shows us that Zen's overview story is, right now, heavily reliant on an incredibly strong, high-demand domestic market in India. Simply put, they're winning big on their home turf. And you know what's crazy? The momentum didn't even pause when the quarter closed out in June. Literally immediately after Q1 ended, in July 2026, they went out and secured an additional 177.5 crore order, specifically for upgrading and integrating tank and crew gunnery simulators. So before Q2 even really had a chance to get going, they tossed almost another 180 crore onto that already gigantic pile.
Moving on to Section 3, Next-Gen Defense Innovations. Let's look at the actual tech driving all these numbers. And this brilliantly illustrates what they're actually doing. You see, Zen Technologies isn't just sitting in an office building software. They're out there deploying complex hardware systems in some incredibly harsh field environments. They're taking these highly sophisticated setups and integrating them right where they are needed the most. They're rapidly advancing their physical capabilities and really cementing their position as a top-tier leader in anti-drone systems and defense training solutions.
In fact, during Q1 alone, their R&D team was aggressively expanding the product suite.
We're talking about some truly incredible new rollouts here. An AI-powered anti-drone system, the Hyperstrike Interceptor drone, a brand new unmanned ground vehicle called the Zen Technologies, and an integrated smart border suite. I mean, they are pushing the envelope in autonomous defense, interception, and smart border security all at the exact same time. These aren't just cool concepts on a whiteboard. These are actual new products actively introduced to complement their already established market dominance.
This kind of aggressive R&D is what builds out their physical footprint. By continuously rolling out complementary, highly mobile, integrated radar and sensor vehicle platforms, Zen makes sure that when a defense client comes looking for a comprehensive solution, whether that's for training or active counter-drone measures, Zen already has an off-the-shelf, deeply integrated ecosystem completely ready to deploy. It's a huge competitive advantage.
Finally, let's wrap up with Section 4, Strategic Outlook and Future. Expanding the horizon.
So if you really want to understand exactly why their domestic order book is sitting over 1,150 crore rupees, you have to understand this one specific term, Buy Indian IDDM. This stands for the government's procurement prioritization of indigenously designed, developed, and manufactured defense products. The Defense Acquisition Council, or DAC, has been aggressively clearing procurements for counter-drone systems and layered air defense. This bureaucratic mandate, it is acting as a massive tailwind, feeding directly into Zen's pipeline, simply because their entirely indigenous portfolio perfectly aligns with what the government is now legally mandated to buy. Talk about being in the right place at the right time.
And their ultimate goal is captured perfectly in this quote from management. They said, "Our ambition is to provide training solutions across all three services, the Army, the Navy, and the Air Force." Now, right now, Zen is already the undisputed leader when it comes to the Army and Navy domains. But to keep this massive overview story of momentum going, they need a new frontier. And in this case, the sky is literally that next frontier.
And they are already executing on that exact ambition as we speak. They've successfully completed the R&D for their very first product offering tailored specifically to the Air Force. Furthermore, they are already in advanced negotiations with original equipment manufacturers, OEMs, to formalize partnerships within this year. Breaking into this air simulator domain, that represents a completely new, incredibly lucrative market expansion that could completely redefine their order book all over again in the coming years.
Which leaves us with this final thought. We've seen the overview story. We know that Q1 dip is really just a precursor to a massive revenue realization phase. So, with a staggering 1,239 crores backlog secured, along with brand new AI-driven defense products and an entirely new Air Force market on the horizon, how exactly will Zen Technologies execute this monumental 12-month cycle as we roll into Q2 and Q3? It is going to be a fascinating execution challenge, and definitely one that anyone following the defense sector should be watching incredibly closely. Thanks for joining me on this explainer, and we'll catch you next time.